Okay guys, hope you're well. We're going to be looking at the DAX this morning. You're going to have to bear with me because I'm laden with cold, need a coffee, so bear with me. Oh, we all know Scruffy likes a coffee. But he'll be changing that for Lemsip in a minute because as you can hear, my voice is going to go. So let's just jump into this quick. The guy's having a bit of a chat this morning about Bitcoin of all things. I'm not a big fan of Bitcoin, but I do like indices, which is what I'm looking at. So if I go to market updates, this is something that I put in all the time. It basically tells them what I'm doing before I do it. So in this scenario, it's telling me to sell the DAX. It's also telling me it's a risky trade and it's monitoring time. It's just gone 10 o'clock and look for about 6 pips. Okay, so what does that all mean in the slice of bread? Well, first of all, let's define some parameters. So if I look out here, we can see the market is pulling against this particular move here. So we've got a dedicated top and a dedicated bottom. So you've got it there, okay? So the first thing I would do on a blank chart like this, I'd look at an anchor and I'd put some sort of levels in, and I can just use a fib. Personally, I prefer to do a full markup and have it correct, but just for speed of use, I want to show you this. So any fibs, I put in dotted lines, okay, and then there we go. This particular move is now telling you a pretty good story. Now, you'll often hear me call these things Kylies. And the reason being is I'm looking for the 50%. You know, and Kylie Minogue's you're only a little person. So, just a half person. Right, there we go. Okay. So, straight away, we now have some structure. We can see that move has pulled down, came up, broke a 23, smashed, but stopped dead here. Okay, which is the 50. And look how it's pivoted along it. Okay, well, let's just pull this back out a second here. Now, what this market is telling me is it's predominantly looking to sell, okay? And we can see that here. So you've got the dominance is selling and the lower time frames is selling. But it is risky because it's not all roses in the garden. Now, we can see that because this is moving up. So where logically should you sell it? Well, you sell high, don't you? So where would that be? Well, that would be here or here. So once I've got these in place and I know what direction I want to go in, all I need to do is place my orders in logical places, right? So that's all done. So let's have a look at a 15-minute. Well, straight away, it's come down. It's now pulling against this particular move here. Now, this is a 15-minute chart. Okay. Now, I'm not going to draw any levels on this, but I want to have a look at it to see what's going on. Well, it's gone up. It's failed up here, and then it's pushed back down. So, yes. So there's a good starting point, the 61. So this particular area is starting to look nice. Oh, excuse me. So, yeah, what I would do is let this push up through there. And this particular zone, we'll just mark a zone in. So I want to start selling here. Okay, and then take it down into 5 minutes, and that looks like a nice sell area. All I need to do is get that price into there, put it, and then saddle it, and then I'll easily get a nice order down onto here. Very, very simple. Now, if I candle count back, 1, 2, 3, 4, 5, it's telling me that's probably the logical point for the sell. But I'm going to use that as a target this time. Why? Because look, bang on this. So all I need to do is just let that push up, get into here, keep half an eye on it, and we'd be fine. And it's not that difficult, to be honest, because all I'm doing is I'm looking for the direction that I've predetermined. Dead simple. So let's play this out and we'll see. But the idea is to enter here and then come back, get where 6-7 pips or whatever it is. Right, it's in, okay? It's above that section. So what we're going to do now, we're going to sell it. So I'm going to put it under the current price. We'll just set it for our pips. Right, that's it. So it's only got to go to the bottom of here to get my target, which isn't enough. But I'm just going to trail this up. Now, ideally, I want it on that edge. And then as further up it goes, the better. But at the moment, it closed inside it, giving me a trigger point. And I just now have to wait. And that's it. So let's play it out and see what happens. Okay, boys and girls, that's that job done, perfectly executed. Let me just clear a couple of things off. Let's get rid of my tickets. And there you go, 33, which is bang on target. Came down, stopped, is pulling up the other way. If I was to hang on to come down here, it could well be gambling. Now, I have a big thing against gambling, and a lot of people don't like me talking about it, saying stop gambling. If you go into the charts without a plan, you're gambling, period. And gamblers will always fail. It's just the way it is. If you look at the way what I've just done here, it's not a gamble. It was methodically thought out. I worked out where the levels will be based on a top and a bottom and a fib retracement, worked out a general direction, and then targeted appropriately. That's what's called a plan, not a gamble. And it has paid me. Now, there's another element to this, and it is something that kind of astounds me at times, because you will work a full hour for £12 or whatever your hourly rate is, and you'll be sweating teeth and one thing and another. But you won't kill a trade for £12 if it had ran for 10 minutes. It's exactly the same thing. If you work hour to hour and think of every hour as an hourly rate, well, that means if I look at this again at the top of the hour, because we're still within the 10 to 11 hour, so I could start looking at it again at 11 o'clock and then look to do another £30. Well, that means my hourly rate is 30 quid an hour. And if I missed an hour out and it dropped back, I'm still on about 15 quid an hour, which isn't too bad. And it's just getting you to think along these sort of lines. And that's the difference between doing this as a job and running it as a business and gambling. So make into it what you will. I'd be interested in what your thoughts are below. There'll always be the case of trading as a gamble, full stop. Well, if that's the case, so's your job. Because you don't know on a Friday how well that business is doing. All you know is that you turn up and that by some grace and favour you get paid. To me, that's a gamble. Because that means you are putting your will in the hands of somebody else. that is always a gamble. It's the same as walking into a bookies. The difference is it's low risk gambling because they're going to pay you. But they only pay you if they've got the money to do it. So if you're there swinging and balling and shouting and doing nothing and not making any money, they'll sharp get rid of you. So put the work in, get the reward out. Don't put the work in, you're gambling. Because in this world of trading, if you don't do your homework, your due diligence, target correctly, look for key points of interest, get the direction right, you're trading blind. You turn up at work and you just do the bare minimum because you're working for somebody else and you twist and ball on all the time. You're gambling because, trust me, the eyes will be on you, and the first opportunity they get, they'll get rid of you. How do I know this? Because I've been on both sides of the fence. And trust me, you're only as good as your last paycheck. Something for you to think about. So there you go. That's a quick scalp on the DAX and the thoughts of a battered old man, because I am feeling battered. In fact, I feel like this. Yeah. I've got a squeeze ball, which is a poo. Fantastic. I still like this one, though. This is indestructible. I love this one. But yeah, got that one as well. I'm going to keep leaving it around the house to annoy Joanne, to be honest. Anyway, as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.